Hey everyone, my name is Joe Bloddick, mortgage broker here in Barrie and Aurelia, Ontario, all over Simcoe County, and actually providing mortgage services available all across Ontario. So I'm glad that you're joining me today. Today I'll be going into how the rising home prices have been affecting appraisal values. So let's get started. All right, so looking at here, we have a rapid increase in home prices and how that's putting buyers in a bind when appraisals actually don't match. Essentially, the appraised value doesn't match the sale price. And what's happening there? Like in my experience, appraisals usually come in at purchase price or slightly above. It's been the going theme in the market over the last number of years. I've been in the industry over 10 years. There have been a few cases where the appraisal value has come in slightly lower over the years, but that is usually to the fact that the house itself has some issues regarding marketability. But let's look at this here. So home prices are running up fast in Canada. Some home prices have increased upwards of 30% year over year, which is amazing for anyone that owns a house right now. But look at this. We are, on a very regular basis, not able to meet the expectations of some of these successful buyers. And this is an appraiser, part of Inner City Appraisals Limited. We've never actually used them. They're located in BC, so this is a different hot market compared to Ontario. BC's always been very, very, very high price compared to Ontario. But let's keep looking. So before COVID, I would say we would have 1 in 50 not match up. And I'd say right now we're not hitting numbers, maybe 1 in 10. And you know what? 1 in 50, usually that's the case in Ontario as well, pretty standard, but I have not seen 1 in 10 yet in Ontario. In BC, maybe that is a different market. So they talk about how the challenge is for the appraiser evaluating a home with a high sale price is determining whether it's part of a trend or an outlier. So this is a good indication that if you are buying a home, make sure to do your research, talk to your real estate agent. As long as you're working with the real estate agent, they should be able to provide you comparables in the market. And these comparables will talk about exactly how much homes in the neighborhood have sold for. And these homes will be similar in square footage, a similar amount of bathrooms, and they can also make adjustments for the price, determining if that home that you're buying has an extra bathroom or it doesn't have a garage compared to the one down the street that's sold. And that way you will have an accurate idea of what your home will appraise for, because you don't want to be an outlier. You don't want to be buying a home for 800,000 and a similar priced home down the street sold for 700,000, because in this case that would be an outlier. So we are seeing more of that now. So let's look at this here. So some trends that put buyers at risk when evaluating a home, because the competition is so fierce, a lot of people are putting in these higher priced offers just to get a house. I've known some buyers that have been looking for a home now, and they put in maybe 10, 12 offers, and they're just getting tired. So sometimes paying 100,000 over list can actually get the house secured for you, but you want to make sure that it will appraise. So when the appraisals don't match, banks and mortgage lenders tailor their loans using valuations and other specific factors rather than prices, which mean a buyer may not be able to borrow as much as they expected. And that is true. When you're buying a home and say the price is 800,000 and you're putting 20% down, and all of a sudden your home is now worth 750,000 based on the appraised value, well then your 20% down payment will be applied to the 750,000, and plus you'll have to make up the additional 50,000 in addition to that. That becomes a lot of money. There are some solutions available. If you're talking with your mortgage lender or broker, they can actually redo the loan in some cases. So you're now putting down 50,000 plus a smaller percentage on the 750, but in this case, it would become a CMHC default insured mortgage, which you would have to pay mortgage insurance for because your down payment is effectively smaller on the actual sales price, including the 50,000 shortfall. That may sound confusing, but if you are in this situation, please call me, Joe Bladdock, mortgage broker, and I can help talk this through with you if your appraisal comes up short. Now, there are some indications that sometimes if an appraisal does come up short, realtors have been able to go back to the seller and sometimes get in a successful adjustment based on that. Or sometimes you might be able to back out of the sale altogether, depending on what you can negotiate with your lawyer and your real estate agent. But it's not guaranteed, and that happens very, very seldomly. So always be careful when buying a home in today's market. If you are paying over the list price, make sure you do your research, talk to your real estate agent, and also talk to your mortgage lender and broker. Your mortgage lender and mortgage broker will have access to tools to help you identify whether or not your sales price will match the appraised value and can give you some guidance with that going forward. Thanks for joining me today. If you have any questions or comments, list them below and hit the like button so we can continue making these videos for you, and hope you have a great day.